Welcome to another S&P 500 analysis. Today is August 7, 2021. The S&P 500 for 7 consecutive weeks, it put in a new all-time high. Will it continue? In this video, we're going to take a look at the price action, the internals, and the sentiment, and also some of the key sector, and see will the S&P 500 continue to put in new all-time high. Stay tuned. Looking at this weekly chart of the S&P 500, you can see that for 7 consecutive weeks starting on June 21st, the S&P 500 put in a new all-time high for each one of these weeks. And last week, it closed with a gain of 41.26 or 0.94% and closed at a new all-time closing high, 4,436.52. The range was a little bit under 68 points. And right now, as it stands, the all-time high for the S&P 500 is 4,440.82. The price is still above this 10-week and this 40-week moving average. And looking at this chart here, clearly the weekly trend is still up. And from this sentiment chart here, we notice that the market participant is still relatively complacent. The VIX closed at 16.15 on Friday, but the put-call ratio is sitting at 0.6. So although the market participants are complacent, but they are also a little bit cautious. And for the day on Friday, it closed up 7.42 or 0.17% with a new closing high. And also looking at the up-down volume ratio on Friday, the up volume was more than the down volume by a ratio of 1.64. And the advanced decline was relatively weak, although it's positive. The advancing issue led the declining issue by 689. But for a record closing day, that is pretty anemic. Here on the New York Stock Exchange 52-week high and 52-week low, there were 142 more 52-week high than 52-week low. Also added a couple additional charts here on the bottom. The green is the number new high, and the red is the number new low. So you can see on Friday, there were 186 new high and 44 new low. So when you take the net difference between these two, then you get 142 net new high. Now looking at the New York Stock Exchange cumulative AD line, we're still seeing this negative divergence here between the AD line and the S&P 500. So you can see that the S&P 500 is making a series of higher high, while the AD line unable to make a series of higher high. So we're seeing this negative divergence still persist in the New York Stock Exchange. So until this gets resolved, we should remain cautious about any new high. And for the Nasdaq market, the Nasdaq 100 actually closed down last Friday. It was down 72 points or 0.48%, although it did make a new all-time closing high on Thursday with positive up-down volume ratio and also over 1,100 more advancing issue than declining issue. But on Friday, it pulled back and actually lost 72 points. But the up-down volume ratio was actually positive 1.19. And there were 156 more advancing issues than declining issues. So that gives us a little bit of a positive divergence in the Nasdaq market. And looking at the Nasdaq new high, new low, there were 82 more new 52-week high than 52-week low. You see on Friday, there was actually 164 new high and only 82 new low. So it's like a ratio of 2 to 1. Looking at the Nasdaq AD line, similarly to the New York Stock Exchange, the Nasdaq AD line is still running this negative divergence. So we're still looking for this negative divergence to get resolved. Though overall, the sentiment is not bad, although the market participants are complacent, but they are exercising caution. And also the advanced decline did show a little bit improvement, but we are still waiting for that near-term divergence, that negative divergence that get resolved in the New York Stock Exchange and also in the Nasdaq market. But the new high, new low, and the up-down volume ratio did not deteriorate. So it seems like the market is still on a holding pattern. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes. Now looking at this daily chart of the S&P 500, and as you can see that, remember we talked about this range here in the midweek video, and we're saying that we're basically looking for it to either break above or break below. Right now, it seems like it is breaking out of this range and targeting this 200% extension at 4452.91. Also, the other thing is, when it breaks out of this range, there's also one other method to project some sort of potential target is by doing a major move of the range extension, essentially taking the depth of this range and project it up. And that would give us 4467.43. Is that a 6? I believe that is a 6. Let me go and double check that. Okay, the extension, this major move is actually 4487.43. Okay, I just kind of shifted over so we could see it. So basically, we want to keep an eye on this to see would it be able to come up to this 4452.91 and possibly move up to this 4487. But if it does come back next week, inside of this range, then we basically have this what we call the balance rule, and that will likely see it to come back down to the other side of the range, and that will bring it back down to somewhere around this 1618 at 4378 level here, and see would it be able to hold. If it doesn't hold, once again, we're still looking at these levels to get retested eventually. But right now, we are looking at this possibility of continue to push up and maybe possibly come back in. So if it get up to this 200% and then come back into the range, then look for a retest of this 4378, and then we'll see how that will hold up. And here on the Nasdaq 100, we also see the Nasdaq 100, continue to push into this area here, try to get to this 1618 extension, the 15,233. Although we got a little bit of a pullback on Friday, we're going to keep an eye on this level here to see would it be able to get above this and possibly get up to this trend line here up above this 15,400. Now, if it does continue to pull back, then I'm looking for this trend line to get tested somewhere around this 14,400. Right, this trend line to see what it get a bounce. If it doesn't, then we're essentially once again waiting to see for it to come back down and retest this 14,073 and see what we get a bounce back up. If it doesn't, then these are the levels that we'll keep an eye on. And for the Russell 2000, I also drawn in this range here. You can see that the Russell 2000 been pretty ranging inside of this range here. Remember, we're still looking to see would it be able to come back up to this 2297. Right now, it's holding above this 2195. So we'll see would it be able to come up, take out this 2297 and get into this, top of this range here and possibly make a move toward the all-time high. If it's unable to get up to that range and start coming back down, dip below the 2195, then look for the bottom of this range here. So essentially, these lows here, we're basically watching for these low and possibly break below, below those low, then we'll be looking at this 2075. And for the Dow Jones Transportation, it's continue to, hold above this 14,242. Notice I also put in a Fibonacci retracement here, and here's this 50% level. So we'll see would it be able to bounce off of this 50% and move up and get back above this 618, then maybe it could start moving back up and take out these resistance level at 14,969, essentially 15,000, and then also up here at this 15,300 or so. So we'll be keeping an eye to see would it be able to get above this 14,602, which is the 618. In this retracement area, because it did get a nice bounce off of this 50%. But if it come down and break below the 50% next time, then keep an eye on this 13,656 area, which is near the in confluence with the 38.2. So remember, we're still looking at the retracement zone. So if it bounce off here and then chop around and then push up to the 618, so we'll see would it be able to break above this 618 on this 14,600. And for the Dow Jones Industrial, again, the Dow Jones Industrial is also seems to be inside of this range here, and it is breaking above this range and breaking out and getting above this 35,150, and it also put in a new closing high on Friday. So using the range extension, we see that the potential target is somewhere around 36,438. So we'll see, would it be able to make it up there? But if it does come back into the range, and again, we essentially are looking at this level down here, 33,700 area here at these lows here. And for the ETF, the SP 500 ETF, the SPY, essentially I got this couple range here that we're looking at. One is this one here, right? This range. So we got some of these look above and fail, look below and fail, and come back in and retrace the range. Right now, it seems to broken out again, and it's coming up here. So again, if we see it come back into the range, then we expect it to retrace back down to the other side of the range, which would be somewhere around 437. Now, then there's also the other range that I'm also looking at is this range here, right? This little bit of a bigger range, okay? So we're basically looking at this. Right now, it's also broken out last Friday. So if it come back in, then we could also see it moving down to the other side of the range, which would bring it at 436. So keep an eye on these price action here. The key thing is watch these couple level here, somewhere around 441, 442, right? To see would it come back in below that. And once it get below that, we want to see would it go below 441. So if it go below 441, that means it is coming back into this range also, right? Then there's a good possibility that will at least maybe retrace back down to the 437.69. And then when it break this, then we know that it could be retracing down to this 436. Okay, and these happen to be a low volume zone. And for the QQQ, the Nasdaq 100 ETF, I have this large range here, okay? So essentially, it has been ranging up here. I mean, on Thursday, it broke that range and came back in. So we'll see, would it come back down and take out this 366.60, right? There is a little bit of high volume node here. You see, would it be able to get a bounce here? Or it could just chop around and then start breaking down once again. And be looking at these value area, this composite value area low at 363 area. If it break below that, then I'll be looking at the 360. That's the bottom of this range here, right? So essentially, look for the 366. If it break below 366, then we'll be looking at 363. And once it break the 363. Then we be looking at the 360. And for IWM, the ETF for the Russell 2000 got this range that I'm looking at right now. All right, so right now it seems to be above this composite point of control. So we'll see, would it be able to take out this 224, 225 area and push us up to the 227. Then we'll see, would it break out, or would it get rejected and pushing back down. Now, if it come back down to below the point of control, then I expect to see this 215 get taken out, or 216, and also retrace down to this lower, lower edge of this zone here, this balance area at 214.45. So keep an eye on this on the 227.60. Or then if it unable to break above that, break out from that, then we're basically looking at the point of control 223 or 222 area. And if it dips below that, then we're basically looking for 214. Now let's take a look at the 10-year yield. You see the 10-year yield came up to 1.29, almost 1.3%, right, after it dipped down to this 1.15 area here. It came back in and got back above this 1.245. So right now we're going to keep an eye on it to see would it be able to come back up to this 1.4. right? So there is this pivot high here. So if it take out this pivot high, then there's a good chance that we might see 1.4 once again. And the dollar got a bit also. It came up to 92.8 on Friday. So it's getting close to that 93, 93 and a half. Once it get up to these level, I wouldn't be surprised to start hearing these Fed talking head start coming out and start talking the dollar down, because once you get into this area of 94, then that could be a problem for the dollar here in terms of trade imbalance and the ability for us to export our goods and services with a strong dollar. So keep an eye on that, at this level at 93 and this 93 and a half. So as you can see, there shouldn't be any surprise that we see the oil continue to retreat with the strong dollar and also with a little bit of increasing supply. But I don't think there's much of a supply or demand issue right now for the oil. I think the oil prices is primarily being driven by the US dollar right now. And you see silver came down and broke below this 24.71. I'm looking for a continuation move down to this 22.72. And here looking at gold, remember we're talking about this 1804. If it is unable to hold this 1804, I expect it to come down and retest this 1700 level somewhere around there. So right now on Friday, it got a huge drop after the the non-farm payroll number come out. And so right now, we basically looking at a strong dollar, and that is not favorable to gold prices. So we'll keep an eye on gold. I think it's a little bit more downside to go. Now let's take a look at the heat map of the S&P 500. As you can see on Friday, the only sector that is really strong last Friday is the financial. Although the energy did came in play to some degree, and also the material, and then the industrial was a little bit strong as well. But notice the tech sector was quite weak, right? Although healthcare is a little bit of a mixed bag here. Okay, so we see that the financial is getting a bit, and the energy as well as the material. Now, looking at the heat map for the Nasdaq 100, as you can see, not much green there, except a couple of biotech and a few semiconductor company. Other than that, is mostly down. And especially look at these, Tesla, Nvidia, Apple, Google, Amazon. So we see that the tech sector on Friday was quite weak. So now let's go and take a look at some of the sector versus the S&P 500. We're basically looking at this ratio chart here. Now, in case you missed the video that I put out on how to generate this ratio chart on the Thinkorswim platform, go check out the link in the description below, and you could click on that link, and it will show you how to set up this ratio chart and how to import the Thinkscript that I wrote to generate the ratio between any two financial instrument. So right now we're basically looking at the diamond, which is the ETF for the Dow Jones Industrial versus the cash index of the S&P 500. So you can see that the Dow Jones Industrial, the ratio been kind of trending on a downward since June, and that kind of indicate that the Dow Jones Industrial underperformed the S&P 500. And here's a QQQ. You can see that the QQQ been up for quite a while. I mean, the technology has been outperforming the S&P 500 until recently. It is kind of flat now. So that means it is pretty much performing along with the S&P 500. So it's not outperform or underperform the S&P 500. Although we are seeing a little bit of a weakness on Friday, and we saw that earlier on the heat map, that the technology was quite weak. And for the small cap, the Russell 2000, this IWM, we see that it's kind of flat right now. So maybe it is making a little bit of a turnaround. But recently, since June, it's been sort of underperformed, or even back here in March. If we look at it back here in March, and So it's basically been underperformed the S&P 500 since March, and right now it's kind of flattened out. So maybe the small cap is making a little bit of a turn, or it could be just consolidating here for the next leg down. Now on this chart, we're basically looking at the TLT, the 20-year bond ETF, and looking at the trend here, it's been up. So you could see that the bond been outperformed the S&P 500. So although the S&P 500 have been making a new high, but the underlying tone here is some of the smart money is moving to safety. And on this chart, you can see gold since May it's been underperformed the S&P 500. And notice last few days of last week took quite a dip on the performance relative to the S&P 500. Similarly to the silver ETF, the performance is also underperformed the S&P 500 in the latter part of last week. And even from the time frame in June to the present, it's been underperformed. And here the industrial sector is also been underperformed the S&P 500. And here's the transportation. See how weak the transportation is relatively to the S&P 500. Now I've been talking about this utility ETF. It's been rising recently, and although it has been underperformed for quite a while, but right now it seems to be making a little bit of a turnaround. So it seems like the market participant, a certain amount of market participant is getting a bit defensive because they are moving some money into the utility sector. Now, here's the thing here on the financial. We noticed that on the financial last week, since the job report came out, we saw a surge here on the financial, the XLF. So right now on Friday, it is outperformed the S&P 500, and that could be a sign due to the expectation of the Fed might start tapering, and we could see the interest rates start going up again. And here's the XLK, the ETF for the technology sector. As you can see, it is kind of flattening out right now. So be cautious about the technology sector. So wouldn't be surprised to see it start underperform the S&P 500. Now, just in the last couple of weeks, we did see some outperformance from the semiconductor sector relative to the S&P 500. So we'll have to keep an eye on this to see would it be able to break above this level somewhere around the 62, to move up in terms of the ratio. To see is the semiconductor sector still be able to carry the Nasdaq market, because right now, every time that the FANG stock kind of rotate out of favor, the semiconductor stock come in and take over. So that's basically what's been keeping up the Nasdaq 100 in the new high territory. So we're going to see is this, bouncing back and forth, handing off the ball to each other continue. And the healthcare sector also been relatively strong compared to the S&P 500 until the last couple of days of last week. So we'll see is this trend going to continue and come back down to see is the health sector starting to underperform the S&P 500. The interesting thing is the energy sector is kind of firming up. It's flattened out here after a relatively underperformed during this period, since June or even back here in March. But right now it seems to be flattened out, firming. So we're going to see would it be able to come up and start reversing this trend here and start doing a little bit of outperforming the S&P 500. And I still couldn't figure out what is causing the natural gas to have such an outperformance compared to the S&P 500. But it's still outperforming the S&P 500. So I don't know, it's not getting close to winter time. So, people is not really spending that much on natural gas. Now, maybe because of the drought in California that the hydro electric plant, is not running. So they have to fire it up with natural gas. So don't know. Maybe that's the reason. I have no idea what's driving the natural gas. If you have any idea or have some idea on what is driving the natural gas market, post them in the comment section and share it with me and the rest of the community. And here's the oil. Oil been relatively strong recently until the last few weeks is kind of softening a little bit. So we'll see. We'll see. Will oil firm up again and start outperforming the S&P 500 once again? But due to the strength of the dollar and the little bit of a pullback, the weakness of the oil price. So we probably will continue to see a little bit more weakness in the near term before it starts firming up again. The home builder is also starting to come back up a little bit, showing a little bit of an outperformance relative to the S&P 500. Looking at the retail sector, the retail seems to be a little bit of softening recently. And we saw the weakness on the consumer discretionary. See the XLY, the consumer discretionary ETF, been relatively weak compared to the S&P 500, although on the price action we are seeing is still kind of trending slightly upward here. So it hasn't broken down yet, but keep an eye on the relative weakness of the performance to the S&P 500. And here's the consumer stable, so it's pretty much flat here. So it's coming down a little bit. So keep an eye on the consumer spending, because I recently came across as saying that the consumer credit seems to have been going up again, and so maybe people is running out of money to spend. So eventually, when these credit get to hit the limit, these consumer spending will most likely dried up. So keep an eye on that. Now let's take a look at the market profile for the E-mini S&P 500. Remember last week we were talking about this potential balance area breakout, and we're seeing it somewhere around here. And it broke out on Friday, but also notice on Friday it put in a poor low. So that will get resolved. And when it does, then it's, most likely it will come back into this range. Then we'll basically look for it to retrace back down to that 43.83 level. And if it break this range, break below this balance area, then we're basically looking for these, unfinished business level here to get tagged. And looking at the volume profile, we see a similar type of breakout that we saw in the market profile. And again, we essentially are looking at this range here that it broke out and, kind of consolidating here. So we'll see what it be able to push up, because it did have a nice little cutoff here. Let me zoom this in and maybe we could see a little bit easier. So there is a little bit of a cutoff on the volume. So there's a buyer cutoff. So we probably will see that maybe make its way back down. And from the market profile with that poor low, so it probably will take out Friday's low and maybe come back into this range and work its way back down to the first level here, somewhere around 43.80, and maybe chop around there before it move down to this 43.70s. Now, finally, looking at this multiple index chart here, as you can see that we have the New York Composite, New York Stock Exchange Composite, the Dow Jones Industrial, the S&P 500. All three of them made new closing high on Friday. The Nasdaq did not. It made a new closing high on Thursday. So all in all, right now, the market is kind of rotating between the tech and the value area. Right? So right now, you see the rotation seems to be into the financial on Friday, but a little bit away from the large cap tech stock and tech in general. So we're going to see, will this, ping pong handing the ball to each other, between the tech and the financial, or to the value and the growth, go back and forth for a while. So when that game stops, then we will likely see a little bit more of a contraction or a correction. So until then, we basically have to just be cautious because there, we notice that the sentiment, the market participant are still sort of complacent, but the put-call ratio also placed them in a cautionary mode. And although we are not seeing much of the deterioration on the internal, but we're still seeing that negative divergence between the advanced decline and the index itself. So it's all about market participation. If the index continue to push all-time high, but we are not getting a broad market participation, that new all-time high is not going to sit well. Eventually, the market will come down on its own weight. So be cautious, and if you like this video and find it useful, be sure to smash that thumbs up. Help me promote and share this video. Thank you for watching, and stay safe.